This is the IRS Problem Solver podcast. I'm David J. Griggs, CPA. If you've got tax debt, payroll tax issues, or the IRS is coming after you, you're not alone. Every week, I share real strategies to stop collections, protect your business, and take control of your tax problems legally and effectively. So let's dive in. Today, we're going to be talking about the IRS Revenue Officer. If you're behind on payroll taxes or owe a significant balance, there's a good chance one is going to show up in your life. They are the IRS's most powerful collectors, and how you handle that first interaction can change everything about your case. So, who are revenue officers? Revenue officers are not the folks answering the IRS's 1-800 line. They're sometimes local, sometimes field level agents assigned to serious collection cases, but almost in all situations, they are going to be at least in your region. They might not be local to you, but they're probably close, and they probably handle in a lot of cases that are close to you. Here's what sets them apart. They work one-on-one with you, not through call centers. They have the authority to issue levies, liens, and garnishments, and they're trained to collect as much as possible as quickly as possible. If your case is assigned to a revenue officer, it means the IRS considers you a high priority. So here's how they operate. Revenue officers typically make that first contact in one of three ways: a certified letter, a phone call, or an in-person visit, sometimes even at your business. Their job is to get your attention and push you into compliance. They'll ask you about your payroll, your bank accounts, and your ability to pay. And here's the important part. Everything you say can shape their decision. If you come across as unprepared, they'll assume you're hiding something or are unwilling to cooperate. And if you come in with a plan, they'll usually back off with some of the more heavy enforcement. So I've seen business owners make three major mistakes whenever they're dealing with a revenue officer. Talking too much. They volunteer information that hurts their case. It's not good. Number two, avoiding contact. Ignoring calls or refusing to meet only escalates the enforcement action. And three, agreeing to payments they can't afford. This almost always backfires, leading to default and even harsher action later. The truth is, revenue officers are professionals. They're not your friend, but they're not your enemy either. They're doing a job, and if you don't manage that process, they'll manage it for you. So how do you handle a revenue officer the right way? Stay calm. Don't panic whenever they contact you. Don't go alone. Having a CPA, an EA, or a tax attorney represent you can change the conversation almost immediately. They definitely look at it differently whenever you're represented by a professional that knows the tax code. And three, lead with a strategy. Show them you have a plan, you pulled all your transcripts, your financials are ready, and a resolution pathway is in place. When a revenue officer sees you're serious, they're often a lot more flexible. What they don't tolerate is stalling or empty promises. And this is exactly why we created the transcript investigation. Before a revenue officer ever sets foot in your office, we know what they know, and usually more. That allows us to meet them on equal footing and keep your case under control. So here's the recap. Revenue officers are the IRS's frontline collectors for serious cases. They have broad authority to enforce levies, liens, and garnishments. And how you handle that first contact can either escalate or diffuse the situation. If you're dealing with an IRS officer now, don't wait. Get representation and build a strategy before the IRS builds one for you. I'm David J. Griggs, CPA, and this has been the IRS Problem Solver. Thanks for listening, and remember, when the IRS sends a revenue officer, it's not the end of the road, it's the start of your defense.